Good morning. This is Cemal Demirtaş, Ata Invest, Head of Research. Today, I would like to touch to Turkish food retail market and in particular shock market, which is our topic, even within the food retailers. Uh, First of all, we like Turkish food retailers, and within the Turkish coverage, we have three major food retailers: Migros, BİM, and Shock Market. We like all of them when you consider the Turkish equity universe, because the organized food retailers are still efficient ones, and they are even growing at a higher pace compared to the total Turkish FMCG market. So these players are strong, and they have efficiency competitive advantage, and they grow. Although we have a lower pace of growth over the last several years compared to the past, still we have a room for growth, and Turkey has a young population. So food retailers still the one which can survive in good and bad days. And nowadays, Turkey is passing through difficult times, I can say. At the beginning of the year, we were more positive. And then some political ups and downs happened, and the geopolitical situation went up and down. But right now, again, things are going on the right direction for Turkey in most ways. And geopolitically, Turkey is at a strategic place, and it has a dynamic economy. And in this economy, again, as I mentioned in the beginning, Turkish consumption, young population, these are the key, the positives. Turkey is just dealing with economic program and high inflation. Right now, we expect the inflation to go down from 40-45% levels to 31% by the end of year. Still, we are in the process of fighting against the inflation. But going forward, when things are settled, geopolitical or political all around, I think in Turkey is in the right pattern towards the goals of more stable economy, more uh, good positioning in terms of the region, and the growth potentials. And again, in this market, in Turkish markets, the food retail is the one which is resilient, as I mentioned in the beginning, and which means the process we are in will go for some time. And it's not going to be easy to just to fight inflation or just more stability in Turkish economy. But we are on that road, because over the last 10 years we had difficult times, and some economic program is in charge, and we are getting on the right direction for the time being. And during this period, Turkish economy and maybe the stock market was under pressure. And right now, as I mentioned, even the most resilient sector, food retailer sector, the valuations are very much depressed, I can say, considering the potentials. So we are in a depressed market, which has a growth potential, and which has better economic conditions like Turkey. And this sector is doing fine in the good and bad times relative to other sectors, and the valuations are cheap. So at this moment, ahead of second quarter, we would like to again flag the food retailers, and at the top, we would like to flag uh, shop market because of several reasons. So we are more constructive about Turkey. We remain confident about the food retailers. And in our Turkey coverage, even we have three major food retailers are in top picks. But the Şok is ranked one, and followed by Migros, and the third one is BİM. So you can have any of the food retailers to have better return for your portfolio. So this is the part I would like to highlight. But when I come to Şok, I would like to mention that Şok had difficult years in 2023 and 2024. So their growth was lower. Profit was much under pressure because of the salary increases and some other reasons, some specific company specific reasons and some other reasons. But starting by fourth quarter of last year, we see improvements in its key metrics, I can say. And when we look at the valuation, the shares are still depressed, trading at 0.11 times EV sales and even 2.6 times EV EBITDA based on the pre-TFRS 29 figures. So we have a company, we have a sector we like, we have a company which is depressed and which we believe is a deep value. And at this valuation, 2.62 times EV EBITDA, it's trading at 56% discount to its its local peers. And even, the local peers, which are also in our list, are also being discounted compared to global peers. So it's it's a good sector and a good company with depressed valuations. And I would like to highlight a couple of things I see in the first quarter results of Şok market. First, they grow faster than the markets, 5.3% real growth and 47.1% nominal growth, which is above the sector and even above the largest peers. So that's one positive. Traffic is declining 0.7%, but still much better than the peers. And similar to some peers, I can say. But overall, they have been resilient. And unlike last year, we see the light at the end of the tunnel. And thus, we believe that the company is very much oversold and the investors have been waiting for some positive developments in the operations. And I would like to highlight that we received that in the fourth quarter and the first quarter. First quarter is a low season. You cannot see the profitability because of the high, minimum wage increases in the first quarter and some seasonality. But starting by second quarter of this year, we expect the Şok market's performance to improve significantly. So for us, second quarter will be a catalyst for the share. And as I mentioned, we like the sector, we like all food retailers, but Şok is, it's a deep value, undervalued, and the market still just put an additional discount on them because of previous year's performances. By the way, the previous year's performance has not been very weak. Maybe the market conditions overshadow the real strength of the company. But of course, in case of very high minimum wage hikes, they were more, vulnerable to the steep increase in the inflation and the increase in the salaries because they have the big team and the human source is important. And the conditions were not very constructive last year, and the service inflation was even higher than the product inflation. So we know the history, and we have some expectations for 2025. So I would like to highlight that this is the time for Şok, and if you want to put some food retailers, you should definitely do it in Turkish universe because of the upside potential 60-70%. And in particular, shock is very much a deep value. Not only the reason is not only being a food retailer, it's like a turnaround case. So, in order to further understand the company, you could read our report at a investor research report, and you can see more details and more comparisons in that report. But for now, I would like to put it this way: Turkey is passing through resilience times. Since the beginning of the year, the stock market had been under pressure. Some political concerns remain there, but some other positive developments are also happening. And the monetary and fiscal policies are very much intact and keeping the economy activity resilient. Geopolitical surprises are on the positive side. The local political side, some those the sensitive issues could be resolved at some point. But right now, that's the one factor drawing back the markets. But any settlement on those areas will boost the markets because all other fundamentals are waiting for a rally in Turkish the markets, I can say. And again, in this transition period, thinking about the rewards and the risks, that's the food retail sector is the one you can have. And as I mentioned, considering that the worst is over war shock last year and the first quarter was the testing of the resilience. And again, over the last 6 quarters, last 2 quarters signal that the company is doing better and operationally getting more efficient. And again, we are waiting for the second quarter, and we believe at these current valuations, we are likely to see the performance of the company, and it will support the share performance. Currently, we have 105 Turkish lira share price targets for 12 months, and it implies around 176-79% upside potential, which is a reasonable one. So I would strongly recommend the shock shares at current levels. Have a good year, I wish, and a good performance. Thank you.